Welcome to another episode of Millennial Investing Explained. Here's today's question. Another financial instrument you can purchase in your brokerage account is commodities. And commodities are things like oil, gold, silver, and they're somewhat similar to bonds in the sense that when you buy it with your brokerage account, you're generally buying a fund. You're buying a commodity fund or ETF that tracks the underlying value of those assets. You're not actually buying the assets themselves because you're not taking physical delivery of a barrel of oil, or you're not going to have gold delivered to your house or silver. Of course you can, and that would still be investing in a commodity. But in general, when you're using your brokerage account, you're buying a fund, which then, like I said, tracks the underlying value of those assets. And so if the value of one of those commodities, say you bought a gold fund, if the value of gold goes up, then the value of your ETF should go up and you would have a positive investment. But if the value of gold goes down, then you're going to have a negative investment and your ETF should lose value. This is an overly simplified version of commodities. They are somewhat complex and they are a more obscure financial instrument to invest in. I don't personally do any investments in commodities myself, but I did want to go into that briefly so you're aware that that is a possibility. That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.